Welcome to Fun with Annuities, where every single week I welcome a celebrity guest expert that can help you maximize Chapter 2 of your life. Listen, learn, laugh, and love every minute of the most unique financial podcast on the planet. Let's get to it. Welcome to Fun with Annuities. I am your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. And I'm glad that you're joining me today on the most unique financial podcast on the planet. Who knew you could have fun with annuities? Who knew there's so much to talk about when it comes to annuities? But there are a lot of things that I need to cover, and today's topic is one of them. And the topic is, there's nothing complex about the annuity industry. The only thing complex are the people selling them and the sales pitches, okay? So if you followed me for a long, long time, or you're just stumbling upon Stan the Annuity Man, my saying is you own an annuity for what it will do, not what it might do. And the will do are the contractual guarantees of the policy, not the hypotheticals, the theoreticals, the projections, the back-tested numbers, the unicorns chasing the butterflies. In other words, when the person says, well, if you'd owned it 10 years ago, look at these astonishing numbers, sir or ma'am. That's hopefully going to go away and become illegal. It is in some states that you can't even show that. And I know the industry is dealing with that right now. But the annuity industry can be very, very simple. What I've done in the industry is made it very, very, very simple. We only look at the contractual guarantees. We only look at what will happen in the policy. You know, we're the top group out here. It's my company. I own it 100%. I have a very big staff. We have multiple offices. But at the end of the day, every single person on my staff asks the same two questions that I ask. And those two questions are, what do you want the money to contractually do? And when do you want those contractual guarantees to start? From those two answers, I can determine, and we can determine, A, if you need an annuity at all. And if you don't, we will tell you. And B, if you do need an annuity strategy, we're going to, based upon those two answers, align you with the strategy that's going to create the highest contractual guarantee after shopping all carriers. It's that simple. The reason I'm doing this podcast recording that I think is going to define the industry for a long, long time is because the annuity industry is all about contractual guarantees, yet the majority of the sales pitches you're going to hear are about non-guaranteed numbers or non-guaranteed assumptions or non-guaranteed hypothetical returns. Or they're going to focus you on shiny things, like some product types have what's called upfront bonuses, which I call candy for the stupid. Meaning there's no philanthropist at an annuity company that wakes up in the morning and says, you know what? I'm going to give away money today. No, there's 100 pennies in the dollar. So when we're quoting like income riders attached to indexed annuities, and indexed annuities, nothing against them, they're CD products, they're not market products, but those are the ones that agents have a tendency for you to focus on the upfront bonus. We quote all carriers for the highest contractual guarantees. Spoiler alert, most of the time, the specific products that have upfront bonuses do not provide the highest contractual guarantee. It's just a shiny thing that they want you to focus on. The other shiny thing they want you to focus on are non-guaranteed numbers. Remember, with annuities, there's many different types. A lot of times when people do happen to get me on the phone, and I don't take a ton of phone calls, when you schedule a call with my team at theannuityman.com, there's a 5% chance you get me. You know, if I'm available, I do open myself up for calls. I tell my consultants that surround me, and I said, listen, I want to talk to people. I want to hear what's going on because it makes us a better company. But we're at such a large scale that you might not get me. That's okay. because every single person you talk to talks like me, thinks like me, watches more videos than you do of me, and they understand what I'm trying to accomplish out here, which is you making a decision on contractual guarantees, you basing your decision on transferring risk. And when I say that, I mean, there's 4 things that annuity software and you transfer risk to the annuity company for. Those 4 things, easy to remember acronym, PIL. P stands for principal protection. I stands for income for life. L stands for legacy. And the other L stands for long-term care, confinement care. So PILL, principal protection, income for life, legacy, and long-term care, confinement care. You combine that with the 2 questions, what do you want the money to contractually do, and when you want those contractual guarantees to start. This is a simple industry with simple solutions. And the people that are making it complex are the agents and advisors selling the products in a complex way instead of stripping it down to the basics. Now, I understand the sales world. I mean, I've been doing this my whole life. I've been in the financial services industry with Dean Witter. Then I went to Payne Weber, so that tells you how old I am. Then, you know, with that, when I was with Dean Witter, it turned into Morgan Stanley. When it was with Payne Weber, it was absorbed by Union Bank of Switzerland, aka UBS. But when I decided to become Stan the annuity man and leave all that behind and leave that golden parachute and leave all those stock options on the table, I did it A, for my health, and B, because I come from a place in the world, probably where you do, kind of rural America, flyover America, where we didn't have a lot of money, and I'm trying to figure out how people got money. And I always had a problem in the markets when I was working in New York and other places, is I didn't want people to lose money. And what we do at the Annuity Man is we only sell fixed annuities, nothing against variable annuities. There are some no-load variable annuities that I would sign off on if you wanted tax-deferred growth, which is why they were put on the planet in 1954-55 by TIAA, used to be called TIAA-CREF, but that's where the variable annuities came from. You could buy mutual funds and you didn't have to think about the taxes because it grew tax-deferred, but that now the average fee annually on a variable annuity, the last time I read, it was around 3%, okay? And I just don't sell anything that has a potential to go down in value, period. But the annuity industry is going in my direction more and more. The more and more I'm out here, done over 1,000 videos, written 7 books on the subject, 400 to 500 articles. I'm always trying to educate and entertain, which is combination edutain. But I'm a little bit more serious today because I worry about the consumer out there. And the consumer here is very, very complex sales pitches. And they talk about, whether it's Monte Carlo simulations on variable annuities with mutual funds. And in the industry, those mutual funds are known as separate accounts. Don't ask me why, they just are. And then the indexed annuity side, or the buffer annuity side, there's a lot of formulas, and it's hard to understand. And a lot of times the companies are allowed to change the rules on how those gains are calculated at their discretion, typically on an annual basis. Some, there's just a handful that don't change the rules, but most of them can pull the contractual rug out from under you. And I always tell people, if you can't explain the strategy or the sales pitch to a 9-year-old, no offense to 9-year-olds, or if you can't, visualize yourself walking into a 2nd grade class and being able to explain the annuity strategy to them, and then every single 2nd grader, including the teacher, understands it, then do not buy it. I had a great call the other day. Someone was getting pitched an index annuity. And for the record, I have nothing against index annuities. We use them as CD products, not market products, because they're not. They were put on the planet in 1995 to compete with CD returns. That's exactly what they do. But we primarily use indexed annuities as a efficient and cost-effective delivery system for the contractual guaranteed income rider when someone needs income in the future. But a guy called me the other day, and he said, kind of went to the same math class I did, I guess, in college. He said, I was reading the specimen policy on this index annuity, and I didn't know mathematical formulas could have letters in it. And I'm like, that's called like advanced calculus or something. But it's very, very complicated. The annuity industry and the agents selling those complicated products they're making it complicated. It doesn't have to be that complicated. When we sell an index annuity with an income rider, you've answered the two questions this way. You've said, I want income. What do you want the money to contractually do? Your answer was income. When do you want those contractual guarantees to start? Your answer was 2 years, 3 years, 5 years, 7 years, 10 years down the road, whatever. And then we quote all carriers that have income riders, not looking at the indexed annuity at all, and in fact, ignoring that side, and then looking at the contractual guarantees of the income rider, what the policy will do. I had a person the other day that said, why haven't I been shown this simply? I mean, the way that I strip it down is so simple. You're basing your decision on the contractual guarantee, not the caps and spreads, the participation rates, and the what ifs, and the non-guaranteed side, which seems to never come true or meet your expectations, and definitely doesn't coincide with the sales pitch numbers that sound too good to be true, because they are. I had a person the other day say, we were shown this index annuity and it showed 10 and 12 and 14% return year after year after year. And my comment to them was, if that is true, then that's all Goldman Sachs and JP Morgan and Credit Suisse would buy, and they're not buying them. Okay. I really wish the annuity industry would go to a simplistic message and strip this down to just the contractual guarantees. It'll never happen, because in a capitalistic world, and I'm a pure capitalist, there are going to be annuity companies that try to distinguish themselves from other annuity companies with their product is different and a shinier thing and has the potential to do X. Okay. I really wish that would go away. If I was Annuities Are for the day, the way to solve it is to have all annuity types, and yes, there are many, many different annuity types. They all have the same commission across the board, meaning that there would be no incentive for the agent to look at the commission that they're going to receive, even though that's hidden from the client and built in. That would not incentivize them to make recommendations. The recommendation in a pure world where all the commissions were the same would be based upon the need and the actual best solution for the customer, the client. So getting back to the premise and the title of this podcast, and the reason I don't have a guest is because I am the guest. You know, most of the time I have guests on. Recently, I had on a life insurance expert, and then I'm getting ready to have on a long-term care expert. But the expert, when it comes down to the simplicity of annuities and presenting them the proper way, is me. I'm the expert. So I'm kind of interviewing myself. And there's been a lot of times here recently I've stepped in and done the podcast with myself and not a guest, because there's some items and some situations that I think are that important for me to address and that important for you to understand. Because if you are going to the bad chicken dinner, expensive steak dinner seminar, you are being presented with a very complex solution in most cases, because it's a high commission product. Remember, the longer the surrender charge and the more complex the strategy, and most of the time it's the more complex the strategy, the higher the built-in commission is for the agent. So if you're going to the bad chicken dinner seminar, or even worse, if you're working for, you know, postal service or something like that, or a union, and they have contracted with people to come in and talk to you about your retirement, most of the time, those people are only showing you complex products, which is horrific. I kind of laugh sometimes because I'll hear that and the person will say, well, this guy said he was a fiduciary. Let me tell you what a fiduciary is. That's a person that puts the client's best interests ahead of theirs. Now, in my world, if you're in the financial services business, you're doing that because you're in the financial services business. That's not a plaque you need to hang on the wall saying that you're a good guy or a good gal in the financial services business. You are putting that person in front of your best interest. You are telling the person if they don't need an annuity. You are not a hammer looking for a nail. And I think my legacy out here, because I'm getting older, I know you're saying, Stan, you look so vibrant. I really am not. I'm getting old, and I've done a lot of these, but my legacy is I want to clean this industry up. I want to get it down to the simplistic nature of just looking at the contractual guarantees. I want to look up 3 or 4 years from now, and the majority of annuities sold are sold like I sell them, which is we're only looking at the contractual guarantees of the policy. We're looking at whatever annuity type will solve your problem. We're looking at the commoditized world of those carriers, meaning there's not one carrier that's better than the other, even though you're going to hear that. And even though some carriers are going to say, well, yes, we are. In a commoditized world, the only thing that differentiates a carrier from the other, in my opinion, is the claims paying ability. The contractual guarantees are the contractual guarantees. When you shop all carriers for the highest contractual guarantee, then the only way that we look at, okay, how are we going to sift through all of these contractual guarantees and choose the right contractual guarantee for you is carrier strength and ratings. We look at ratings, and there's 4 rating services that look at annuities. The primary one is AM Best, but you have Standard & Poor's, AM Best, and Fitch. And on my site, you can go look at what's called Comdex rankings that shows them all, but that's not a perfect system as well. At the end of the day, I look under the hood and I base my decision on the claims paying ability of the carrier and also what strategy we're doing. For instance, lifetime income, we're marrying that company. In other words, typically it's going to be an A+ or better carrier. Currently, there's one that's a little bit less than that, but they just got absorbed by a larger company, so their ratings will go up. But it's typically A+ or better. Why? We're marrying that company. That's hard for Southerners to say, MARRYING, even though I've been married for 35 years to the lovely Christine, who has put up with my eccentricities. Thank you, Christine. But if we're looking at MIGA's fixed rate annuities, the annuity industry version of the CD, we're dating that company. So dating versus marrying. Dating meaning we're not marrying them. We're going after the duration. So I'm looking at the claims paying ability for that duration. And sometimes we might say, hey, this B++ company carrier that AM Best has B++ is good for that duration. We've looked under the hood and they can back up the claim, but we would never sell you a lifetime income product in a lot of cases with that B++ carrier. Not all the time. There's no absolutes. I love it when people ask me, what's your take? They ask me for that 30,000 foot claim. You can't make that. There's so many different carriers. There's so many different variables that I look at. And obviously I'm trying to match you up with the highest contractual guarantee. The good news is the site that I've developed is unique and one of a kind. Number one, you can run quotes 24/7, 365. And I'm trying to think like you and what you would want when you put that information in. You can run it at your leisure. Nobody's going to call you and say hi. Oh, it's all where you run a quote. I had a guy the other day, and he goes, you probably see me run quotes a lot. No, I'm not. I mean, we have hundreds of thousands of quotes run. We're not looking at who's quoting. We're not running some algorithm. We put it out there so that you can see what the highest contractual guarantees are, understanding that when you're running lifetime income quotes, those quotes are like a gallon of milk. They expire every 7 to 10 days. So the only way to lock that in is to call us up, say you want to move forward. We lock in the quote and we take care of everything from start to finish. The annuity industry is going through kind of a renaissance stage right now. And that's the reason I think this podcast is important, because I want to stick the foot in the ground, the fork in the road moment, stick the flag down and say, it's time to only focus on contractual guarantees. And if anyone is showing you anything other than contractual guarantees, say them, listen, that looks great. That looks great, Joey or Joanne agent or advisor. Show me the worst case scenario. Show me the contractual guarantees. Show me what the contract says. Show me what I'm going to get if all heck breaks loose. What is that number? Because that's the number you have to base your decision on. Not some hypothetical, not some sales pitch that says, well, if it goes up in value, there's a potential, there's a possibility that the income is going to increase as well with that. Listen, if it sounds too good to be true, it is every single time. There's no exceptions to that. So if you get this feeling in your head, man, why isn't everyone buying that product? It's because it's not true, and the sales pitch is being pushed to the limit of the truth and the facts. So you own an annuity for what it will do, not what it might do. Now, for the people out there and I do have a large following, huge following of consumers, but there are some agents and advisors that watch this as well, which is good. My hope and dream is that I want you to strip it down to contractual guarantees. I want you to simplify the message, because it is simplified. And when you go to my site and run quotes and look at the live MIGA feed, it is simple. When you watch my videos explaining the good, the bad, the limitations, and the benefits of all these strategies, it is simple. It is basic. It is easy to understand. So, I mean, the only thing that's complex are the sales pitches that are out there and the sales messages that are out there, and agents that want to make it sound fancy. It doesn't have to be fancy. Contractual guarantees are not fancy. Contractual guarantees are not complex. Contractual guarantees are about the number. You're buying the number. Just like when you make a decision on Social Security, or just like when you make a decision to purchase a CD for a guaranteed interest rate, and MIGA's multi-year guarantee annuities are the annuity industry's version of a CD, where you lock in a guaranteed rate. You're locking in the number. You're not locking in a hypothetical. You can't lock in a hypothetical. And that just hit me. I need to put that on a t-shirt. When someone's showing you a hypothetical, say, can I lock in that hypothetical? That looks great. I love that return. I love that hypothetical. Can I lock that in? Of course you can't. The only thing you can lock in with an annuity company is the contractual guarantee. A policy that you're going to receive from the annuity company is a contract. The reason that we can be as big as we want to be with as many clients as we want is because we're selling contractual guarantees. There's no revisiting, the policy. You bought the contract. If you want to call us up and let us read you off the contractual guarantee that we have in our database for you, then we can do that. But there's no revisiting, choosing strategies. The strategy is the contractual guarantee. I am on a mission to make this as simple as it is. I'm on a mission for the consumer to understand that it is simple. I am on a mission for the industry to follow my lead. Pioneers take all the arrows, right? And I'm okay with that, to make the message simple, to make the message commoditized, to make the message about contractual guarantees, to make the message to shop all carriers. Now, I get a lot of blowback from the industry about this, which is interesting, because my answer to the grand poobahs that call me and say, Stan, you need to come off this message because, our XYZ annuity is a different animal. I'm like, sure, My comment to them is this: if you would just follow what I'm saying, if you would just buy into the contractual guarantees message, the will do, not might do message, the industry would triple, minimum, triple. I mean, you have what, 11, 12, 13,000 people turning 65 every single day? They're looking for guarantees. They're not looking for hypotheticals. They're not looking for dream scenarios. Most of them are smart enough not to look for a too good to be true or believe a too good to be true sales pitch. If the industry would follow me and they would get on board and we all would go in the same direction of contractual guarantees only, the word annuity would not be a curse word like it is today. The annuity industry would get rid of its bad sales reputation that it's earned by selling the dream and not the contractual realities. And more carriers are buying into that. They're buying into the direction that I'm going. Why? Because they're seeing the volume that we do. They're seeing that clients are happy. They're happy with the contractual guarantees. They're fine with knowing what it will do and not caring about what it might do. Because in chapter 2 of everyone's life, when you get to chapter 2, which is retirement, or when you're pivoting to that next stage of life, most people just want that lifestyle to be in place. Because I always tell people there's 3 phases of retirement: go, slow go, and no go. And I tell people, let's maximize the go, because we're all going to get to slow go. And if some of us get to no go, it's no fun. No go is no fun. Can we all get an annuity amen on that one? There's no U-Hauls behind hearses. Don't fly first class or your kids will. Think about it. That's what I want you to take away. The complexity of the annuity industry is self-imposed. The complexity of the annuity industry lies at the feet of the agents and the advisors that make it complex. The complexity of annuity sales pitches is about the agents and advisors trying to make it complex and trying to make themselves look smart and not speaking people's language of just talking about what it will do in the contractual guarantees. I don't blame the carriers. The carriers put out the products. They cannot reel in or oversee what agents say, which is a bad thing. And the bar is pretty low to sell fixed annuities. I mean, there's not a lot of licensure that goes into play. That's good. You can argue both ways, good or bad about that. but it does mean that people can, get a license in 2 weeks, hold a seminar on a Saturday, 2 weeks following, and then, sell you fixed products. And that's coming from someone that in a previous life, I had the securities license, the Series 7. I don't sell securities anymore, but getting that license is a hard one. You got to know what you're doing. You got to have some IQ, and you got to understand markets, etc. I mean, not just everyone can pass that. But I digress. Right. This is going to be a shorter podcast because there's no guest. I just felt that I needed to get on and talk about the complexity. There's nothing complex about annuities of any type. There's nothing complex about an immediate annuity or deferred income annuity or a qualified longevity annuity contract or an income rider. Those are the 4 ways to do lifetime income, transfer the risk as long as you're breathing or on a ventilator. There's no ROI until you die. There's nothing complex about a MYGA. It's a CD version. It's the annuity industry version of a CD. It's the other products that become complex because the agents make them complex. If they took the other products and just looked at the contractual guarantees and only sold for the contractual guarantees, they would sell more. I tell agents that too, because agents, there's no agents that work for the annuity man at the time of this taping. The huge staff that I have are customer service people that are all licensed that, take your applications and handle things for you and make sure everything's concierge service for you. There are no agents we farm leads out to that are going to show up at your doorstep. I mean, agents always say, well, I'd love to work with you. We don't need you. We're selling contractual guarantees. We don't need an army of agents. We just need the best website in the world, which we have, cost me a ton of money, that you can go on and look and read the articles and download books for free and read the books, the owner's manuals I've written, and watch the videos that correspond. That's how simple it is. And the biggest compliment I get all the time is, listen, I went to your website, I watched the videos, I read the books, I ran the quotes, I got educated, then I scheduled a call with you guys. That's the way it's supposed to work. We are not a hammer looking for a nail. Our industry is filled, unfortunately, full of agents and advisors that act like hammers looking for nails. We have no problem telling you that you do not need an annuity. Give you an example. I took a few calls this morning. I'd say probably 5 before I got on this. 3 of those people, 3 out of the 5, spent the time on the phone. I asked the questions. We had a good conversation. And I said at the end, you don't need an annuity. Each one of them was different for the reason why. But I told them, nah, this isn't the time, or you don't need one, or this is how you need to set it up. One of the great stories was the male was trying to set something up for his loving wife that's put up with him for all these years. And he said, I need to set something up and buy something for her. And my comment to him was, well, is everything okay? And as long as you're alive and hitting on all cylinders and cognitively there? He goes, yeah, everything's good. We don't need anything. I'm like, great, then don't buy an annuity. How easy was that? Set up the trust that when you die, it triggers an immediate annuity purchase for your spouse so that they can go see the kids or the grandkids. Spoiler alert, that's the lovely Christine that's married to Stan, the annuity man. That's how we've got it. As long as I'm hitting, we're good. As long as I'm hitting on all cylinders and doing this, we're fine. But when I pass away, she could care less about finances, the stock market, annuities, transfer risk, all this stuff. She could care less. She wants to go see our daughters and grandchildren. That's all she wants. And you know what? That's what she should do. So there might be a case that I say, hey, wait to buy it later, or here's how you buy it later, or it triggers upon your death. And by the way, death is not a good strategy. You can only use it once. So, we're going to shoot straight. And whether you get me on the phone or my team, it'd be cool if I got you on the phone, but that's becoming more and more fleeting as we get all of these calls coming in and all these scheduled calls. You can schedule a call. You just might get me, but most of the time you're going to get someone else. But we're all going to do the same thing. We're all going to listen. We're not going to high pressure you. There's never an urgency to buy an annuity of any type. The urgency is for you to understand what you're buying. That's the other thing about the annuity industry. If we went to a commoditized, looking at the contractual guarantees only world, no one could say, well, we really need you to sign the paperwork, sir. The bonus is going away. You probably need to lock this in. That's all nonsense. It's garbage now, but it definitely would be garbage if we solely looked at the contractual guarantees. What you're going to see with the annuity man going forward as we get bigger and bigger, as my voice gets larger and larger and reaching across the country, is we're going to start combating the complexity. I guess is the best way to do. We're going to combat the complexity out there that most agents and advisors choose the way to sell annuities or pitch annuities or promote annuities or show people annuities in a complex fashion. We're going to strip all that down to where pretty soon, when someone tries to sell you something complex, you're going to say, because you're going to either be familiar with this message, me, or our national message coming forward, you're going to say, show me the contractual guarantee. Show me the will do, not the might do. Show me what the contractual realities of the policy are. I want to base my decision there. And the more and more that happens, that happens every single day. And people will buy and say, yeah, they presented me this, I didn't understand it, I just want something contractual. They're hearing the message. That message is getting ready to be blasted even louder, because annuities are a good thing. Contractual guarantees are a good thing. Lifetime income is a good thing. Principal protection is a good thing. Legacy is a good thing. You can't hate annuities and take your Social Security payments. You can't hate annuities and take your pension payments if you're so fortunate to have one. You can't hate annuities and buy CDs, because annuities have a version of a CD. So that message is getting ready to be blasted even louder than I blasted it already. This podcast, ton of listeners. My YouTube channel, ton of subscribers, ton of videos. We're over 1,000 videos, okay? 1,000 videos on annuities. And as long as I'm breathing and go, not slow go, I'm going to still do this and talk straight to you. I'm looking at you. Listen to me. Annuities are not complex. Don't start a conversation with us. Well, I used to hate all annuities. We're going to blast you. You mean you hate Social Security? You mean you hate CDs? Stop all that. You're better than that. You're smarter than that. And maybe it's just give you some grace a little bit here. Maybe it's just all the complex sales pitches you're hearing locally or on the internet somewhere that make no sense and makes everything fuzzy. Annuities aren't fuzzy. Annuities are contractual. Okay? So the conclusion is this. Annuities are very simple. They're not complex. Okay? Don't buy the complex ones. If you're looking at the complex annuities, then look at the contractual guarantees, which make them not complex. The only complexity with the annuity industry are, unfortunately, the majority of people, advisors, agents, masters of the universe, trying to sell them. But if you look at just the contractual guarantees, they're very, very simple, and you can explain them to a 9-year-old. No offense to my 9-year-old friends out there. Hey, my name is Stan, the Annuity Man, America's annuity agent. You've been listening to Fun with Annuities. I'll see you next time.